Hello guys, and welcome back for another Harmony 1 price prediction analysis video. And at the time of this recording, Harmony 1 is giving us a bit of a breakdown move to the lower side. And on today's update video, I will be giving you the key areas of supports that we need to pay attention to, and above all discuss my long-term perspective of the chart. So make sure that you stick around till the end of the video. And starting the video here on the 4-hour chart by first discussing an EDO12 structure that I have been observing from the lows we made on the 7th of April, where I believe that we first saw a bounce in the formation of this wave 1, saw a pullback in the formation of this wave 2, and then saw a massive bounce over here in what I am terming as the formation of that wave 3. And there could be high chances that we have a high in place in the formation of this wave 3, and a breakdown move in the formation of this wave 4 is now imminent. And once we have a low in place in the formation of that count 4, then we should expect a bounce in the formation of that wave 5 to the upper side. And to just show you that the wave 3 over here has done the minimums, I will be connecting the fib extension from the low of the first wave to the high of that wave 1, then connecting the Fibonacci's to the low of the second wave. And you can see that my first target area for the wave 3 was fully hit above the fib level 1.618, and that lies above the 0.01148 as our minimum target area. And in that bounce to the upside, you can see that we made a high above the 0.01185, and that means now that we could now have a high in place in the formation of these wave 3, and a pullback is now imminent in the formation of these EDO12 count 4, whose minimum target areas can be given by connecting the fib extension from the low, that is the Fibonacci's from the low of the second wave to the high of these wave 3. And on so doing, the area that I'm paying attention to lies between the fib level 0.5 and the fib level 0.382, and that is between the 0.01035 and the 0.0107, which is the red target area that I have marked here on the chart. And that is an area that I'm paying attention to in case we continue pushing low, because within that area we should find support and then start a reversal to the upside in the formation of this wave 5 to fully complete that 5 wave structure to the upper side. So that is all that I'm watching out on the short term. We also need to have in mind that in case we get a massive breakdown move, losing support above the 0.01035, then that will be a clear indication that whatever is playing out over here is a more bearish case scenario. That will also make me change my interpretation of this movement over here into an ABC corrective structure, having this as the wave A, a pullback in a wave B, and finally topped out in the formation of that wave C. And from that point, I will easily expect a massive breakdown move to the lower side in a more impulsive structure in the next coming days. So we need to pay attention to that key area of support. Jumping to the weekly chart, here on the weekly chart, you can see that from the lows we made in 2020, we saw a very aggressive bounce over here, giving us an all-time high by then above the 0.22291. And in that bounce to the upside, at some point the market was up more than 14,727% to the upside. Then we saw a bit of a corrective structure over here before we started an even more aggressive bounce to the upside in a move that gave us an all-time high above the 0.3791. And in this second bounce over here, the market was up more than 700% to the upper side. Then we started a bear market where you can see that from the highs, that is from the all-time highs, at some point the market has been down more than 97.66% to the lower side. And you can see that from the lows we made in 2022, we have been stuck within a consolidation range for a period of up to more than 1 year. And basing my analysis on the EDO12 structures, from the lows we made back in 2020 to the all-time highs, I have been terming that aggressive bounce as the formation of that EDO12 count 1. Then we started a corrective structure in the formation of these wave 2 into the lows that we made over here on the 7th of April. And there's a very high chance that we have a low in place in the formation of that second wave, and a bounce is now imminent in the formation of these wave 3 that can easily take us to new all-time highs. And the minimum target areas for that wave 3 can be given by connecting the Fibonacci's, the Fib extension from the low of the first wave to the high of that wave 1, then connecting the Fibonacci's to the low of the second wave. And on so doing, we get a minimum target area on the Fib level 1.618, and that lies above the 0.61617 as our minimum target area. And if that target area is hit, then Harmony 1 will be able to give us a new all-time high in this bull market. Then we can expect a wave 4 and then continue pushing even higher in the formation of that wave count 5. So that is the roadmap that I'm expecting Harmony 1 to follow on the short term and also on the long term. And let's be patient and see how that plays out, and I will ensure you stay up to date.